Welcome to the What to Watch video update. This is the last video that I do over the weekend where I pull out the charts that seem to be telling us something and I put them into one of three categories: positive, negative, or those things we're just keeping an eye on. And we're looking at an interesting market situation. Now, going back to last summer, we've been seeing this gradual shift of growth over to value. And sometimes it gets a little more intense, then it backs off a little bit, and then it picks up a little bit. Well, we saw that pick up more this past week. Now, we ended up pretty much flat for the S&P 500. We were down a little bit on Friday, but we were up a little bit for the week. Real small move there. And we're seeing some things that are giving us some concerns right now, but it's all coming down to what I'm seeing here is a multitude of 50-day moving averages, not just on the S&P, but across a number of different indexes and really important spots that we keep an eye on in the market. And I'll go through those and show you the charts. And that gives us a launching point for the upcoming week. We have something that's not that hard to follow along with and keep an eye on. Now, it's not whether we break the 50-day moving average during the day. All right. We actually opened below it on Friday, but then by the time we closed, we got back above it. The close is the important part. So that's what we'll be watching for. And it looked like Friday we were just going to go down the tubes. Well, we set the low right at the open, and then we were able to bounce up from that. And we did see some gains that were given up later in the day, but based on where we started, it was a little bit more positive. So the market's not ready to roll over, at least yet. And we're asking the question this week, will the multitude of 50-day moving averages hold? And this is being prepared for Monday, November 17th. Okay, before I get into the whole video, I do have a program, and some of you, this might be the first time you're ever watching any of the videos that I do. Feel free to check this out. It's free until the end of 2025. It's hosted on Substack, and you get immediate access to the videos. So right when I'm doing them, I immediately upload them to the website where I hold off posting them on YouTube and Rumble. There are some additional things that I also post on the website. You have access to me. We can set up a time if you want to talk about things. Just see if it's something that interests you. So feel free to check that out. Okay, first of all, we're going to look over the positive things. There are still some positive things. If I was to sum this down, in the big picture is still looking okay. The short-term picture, it's looking vulnerable right now. Did we do enough on Friday? Because the 50-period moving average is held on Friday, not only for the S&P, but across a number of different indexes. Is that enough? Are we going to be able to go up from here now? Have we done enough of a test yet? Have we caused enough doubt in the weaker hands to say, well, maybe the market's going to go down now? Or are we getting ready to see more of a decline? Hopefully, this week will help bring that more into focus. But first, we look at the positive charts. Now, we had a slight up week. So, I mean, we didn't really change all that much from Friday to Friday here, but we were up a little bit. So I have this on the positive side. Now, the week started off really good. We had a gap higher on Monday, and then we came up and closed at the high. That was looking pretty good. And then we added a little bit to that on Tuesday. And then Wednesday was kind of a blah day. Really not much happened. Then everything started to switch. And we're getting more Fed speak coming out saying that maybe that rate cut in December is not going to happen after all. And we can trace that back to Jerome Powell's press conference after the Fed met. He threw some doubt on that. The market didn't like that. And we've been hearing from a number of Fed officials, the people that are on the Federal Open Mouth Committee, and they love to talk. And right now, they're pretty much all saying the same thing, at least based on what we're hearing, is that they're not really sure about this rate cut in December. So that was a couple weeks ago, that was a done deal. And it was that, yeah, the Fed's going to cut rates in October, and they're going to cut them again in December. And the market just said that's the way it's going to be. And then we had the government shutdown, and that has really hurt getting economic reports, and then they're supposed to be coming out at some point, and maybe some of the reports may not even be released, and that causes some uncertainty. And it's like, why not just give us the reports? The market uses those to key off of, even if it might be manipulated data and so forth, but still the market uses it. And but the market has really held up quite well in spite of the government shutdown. But then it got rained on when it's like maybe this December rate cut isn't going to happen after all. So, and then things started to shift on Thursday. We gapped lower and we closed pretty much at the low. And then it looked like Friday, oh my gosh, we were just going to be taken out and shot. And right at the open, it looked that way. But we opened at the low, set that right at the open, and then made a gallant effort. We came back up, actually went positive. This dark line here is the daily pivot. We couldn't seem to get above that. That's about as much as the market was willing to do any buying. Chopped around there and then closed a little bit negative on the day. So not great, but the 50 period moving averages are holding. Now the 20 period moving averages, we've lost those. So the short term is negative. It's the intermediate term that we're dealing with right now. And here's the chart. Because we had a slight up week, even though we were down on Friday, I still have this on the positive side. Now, this is a little bit hard to read because we already have December's pivot points. That's what I like about pivot points. They're on the chart before we even get to December, so we know these levels. And the market relies heavily, especially the NASDAQ and NASDAQ 100. They really rely on these, and even the S&P. That's why I follow these really closely. But this blue line here is the 50 period moving average. And so far, we are above that on a closing basis. Now, we did bounce after a gap lower open, and we recovered a lot of what was lost, and it was below average with volume. We had a pretty significant down day on Thursday, and that was on above average volume. That's a little bit of a concern when we see selling really pick up the pace and be above average, and then we try to bounce a bit out of that, and we see it on above average volume, excuse me, on below average volume. A little bit of a concern there, but you can look at the chart. We're still in an uptrend for the most part. We're still seeing higher highs and higher lows. We're kind of stalling right now. We don't know if we're going to fall down a little bit more here or if we've hit support enough to now go back up. That's what we're trying to figure out. All right, now from a trend perspective, in the short term, we are negative because we're below the 20 period moving average. This is a moving average rainbow, and I go from 10, 20, 30, 40, 50. Now, we came down here, and the reason why this is positive is this has gone pretty quick to this point. We're inside the rainbow right now, but we haven't been here for very long. And so the lines haven't started to roll over yet. The longer we're in here or the more we start to go down below this, yeah, the lines are going to roll over. We don't know what's going to happen there. But for right now, even though the short-term trend is negative, the lines that feed into this are still holding up for the time being. And we are dealing with the 50 period moving averages. And we opened below it on Friday. We closed above it. So that is holding. Now, earlier in November, we also were below the 50 period moving average, but closed above it and then had a couple of days of bounce after that. Are we going to see a similar thing now? Or is this just a little bit of a tease before we get set to go lower? And then the intermediate term trend, still positive, even though the 50 period is in here and we came a little bit into the rainbow. We closed up above the rainbow. And with the intermediate term trend for right now, the lines are smooth and they're going up. The intermediate term trend is still intact until proven otherwise. And so we're below the 20 period moving averages, but we're above the 50. And then we have the 100 and the 200s down below. If we break below the 50, then we're going to be starting to watch the 100-day moving averages. And we haven't even come down to this. This is a little different way of doing moving averages. These are anchored weighted moving averages. And I have this orange line here. We almost came down to it when we were falling earlier in October and then September, and then we came up out of that. And we still are above this orange line right now. So if we do break down below the 50-day moving average, we'll be watching this level as well. If we break below the orange line, then we have this other greenish kind of yellow line here. And we'll be watching that as a possible area of support. Now, when you take all of this together, though, we're still positive. You can see all these other anchored weighted moving averages, they're still going up. Even the one that we're possibly going to test, that's still going up as well. So in the bigger picture, we're still positive. We're just looking more negative in the short term or more vulnerable in the short term. And now this is the weekly parabolic SAR. The dots are underneath, that's positive. Now, when we get over to the daily side, the daily chart is negative. But here on this chart with the weekly version, we are still positive. And earlier in the week, we had enough of an upward move where we saw some green X's. This is a weekly point and figure chart. Now we get over to the daily side, we're seeing some O's that are red. That's negative. But these green X's, that is positive for right now. And the longer term, those stocks in the S&P above the 200-day moving average, we haven't fallen below 50. We're still at 57.8, so we're hanging on to being positive. I treat this as when we're above 50, that's positive. When we're below 50, that's negative. And then longer term, the trend. Now we're buckling over a little bit here. We were starting to see a strengthening trend. This is a weekly chart and we were coming above the moving average. Well, now with the down week a week ago, and we really didn't go anywhere this past week, the ADX is starting to say, wait a minute, maybe I'm not picking up a trend after all, and it's dropping down below the moving average. And it's below 20. So we're not trending right now, according to this. We're below the blue line and we're below the moving average. Now, we're still positive. We still default to positive, and the reason this is on the positive side is the green line is above the red line. Again, when we get to the daily side, it's going to be negative, but the weekly chart is still hanging in there for right now. And we have some long-term oscillators. This is a daily special K. That is still positive. It's above the red line. The weekly chart also above the red line. That's still holding on for the time being. Now, the Dow, the reason it's on the positive side, just last Wednesday, we set an all-time high above 48,000. And so that's about as positive as you can get. And we are coming down here. We're still above this pivot point and we're still above the 50 period moving average. So for this particular index, we're not testing the 50-day moving average, at least for right now. It's other indexes that have more stocks. The Dow only has 30 stocks in it, and it's been holding up a little bit better, but it's also been under pressure in Thursday and Friday session. The Wilshire 5000, a broad market measure, we're just a little bit above the 50-day moving average, so that's positive. The total US stock ETF, just a little bit above the 50-period moving average. And you're going to hear this over and over on the positive side. The NASDAQ, just a little bit above the 50-period moving average. NASDAQ 100, a little bit above the 50-period moving average. The Qs, which is the ETF for the NASDAQ 100, above the 50-period moving average, but still below the 20. That's another reason why we're negative in the short term. Now, long term, the weekly chart of the NASDAQ 100 still well above this trend line going back to 2009. The FANG Index right on the 50-day moving average. These are the really big stocks. Facebook, Apple, Amazon, Netflix, Google, Nvidia, blah, 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 blah. And these are the stocks that really drive the market. And so far, this support level is holding. Now, we're looking at a stock to bond ratio. Yeah, we're taking a bit of a hit here, but in the bigger picture, we're still positive. And when we're up in this area, the market thinks that we're going to have a soft landing, which means no recession. Now, you're going to see a lot of this with some other stock to bond ratio charts. Like here, the S&P 1500 to short-term bonds, a little bit of a hit here, but still positive in the bigger picture. A broad market measure with 3 to 7 year bonds into the top end of the rainbow, but still positive in the bigger picture. The tech sector to 3 to 7 year bonds, same thing there. The NASDAQ 100 to 3 to 7 year bonds, a little bit of a hit, but still at the high end of the rainbow. And then the Qs, that's growth to IWM, that's small caps. That's the Russell 2000 small caps. This is still well above the blue line and is continuing to go up. That is positive. And then the NASDAQ 100 to Dow ratio, still well above this red line. That's hanging in there. And the long-term trend. Now the 50-day moving average, that's part of this long-term rainbow here. That's why we're hitting it a little bit, but the lines are still going up. We're still above the rainbow. The long-term trend is still positive for right now. And this has actually been improving, but this is a little slower. It takes time for this to develop. This is a 10-day average of the highs and lows for the S&P. we were getting a little bit concerned because the context was this was going down, but we didn't quite get to 50. That's the line between positive and negative. And now we're starting to go back up because we're seeing other stocks in the S&P that are seeing some buying. They're value stocks, where the big stocks that drive the indexes, they're kind of out of favor, at least for right now. We'll see if they come back into favor in the upcoming week. But this is actually positive because we're above 50 and we're improving. And then we look at a 50 period moving average of the new highs and new lows, quite long term there. We were coming down, and this was giving us a little bit of concern. Now we're starting to tick back up. Now, the bigger picture, we're positive. We're above zero. That's why we're in this blue area. And then a broad market measure with a 5 period moving average of the highs and lows, we're coming back up where we were looking more negative. Now we're still negative now, but we are improving. And then large cap growth, still hanging out. Another 50-day moving average to throw into the mix here. That's holding for the time being. And then this is a weekly chart. We were up just a little bit. And the takeaway from this is all of these bars here, each one is a week. And we're still seeing, for the most part, higher highs and higher lows. Now, we didn't set a new high this past week, but we haven't really ruined the pattern of these lower lows either. So this is still looking okay for now. Now, if we do start to fall, we'll be watching this R1 level. If we go up, we'll be watching this R2 level as overhead resistance. And then we're really watching the Dow Jones Semiconductor Index. And this is a weekly chart, not a daily chart, a weekly chart. And we're over 100% above the 200-day simple moving average. Now, the reason why this is positive is because we're over 100% above the 200-day moving average. But this could turn into something negative because we're getting quite far away from that moving average. And each one of these bars is a week. And other times when we got up around this 100 level, that's when we saw a more significant decline after that. This is going into the bear market of 2022. Now, we were up here before. We did see a pullback, but then ended up going up out of that. We've been above this now, and then we come down, and now we're above it. Now we're coming back down. So we're still overextended here, and it's still treated as positive because of the reading that we're getting. But we want to watch this. If this really starts to come down, semiconductors are a huge part of tech, and tech is the biggest part of growth. So that's why we want to keep an eye on that. And the Dow Jones Semiconductor Index. This is a daily chart. The 50-day moving average so far has held. The SMH Semiconductor ETF, we came right down to the 50-day moving average and we closed up off of that. That's an important level to keep an eye on. And then here we have another weekly chart. This is the SMH Semiconductor. Now, we never got up to the 100% level with this ETF. Even though these are semiconductors, these are calculated in a different way. I'm treating it as positive because it's still giving us a very high reading. But we want to watch this because if this starts to go down, there's a lot of semiconductor indexes that I follow and different charts that we look at. So we can get a lot of different perspectives on this, but we want to watch that area. And then the semiconductors to Dow ratio, still looking pretty good. Even with the Dow setting all-time highs, we took a bit of a hit with the ratio, but we're still well above the blue line. And then seasonality. It's like, okay, yeah, Fed's going to cut rates in December. Now that's in doubt. Oh, I'm going to buy in November. It's the strongest part of the year historically. Yeah, that's true. Just tell that to the first half of November because we've been really struggling up to this point. But from a seasonal perspective, we are positive no matter how you look at the data. This also shows positive seasonality going into the end of the year, positive seasonality for the first half, and now we're going to be entering the second half of November. Now we go over to the negative side. Okay, so short term, this is a 10, 20, 30 period moving average here. It's called the bow tie, and we are below all of these moving averages. And the green line, which moves the quickest, that's a 10 period simple moving average. It's now starting to roll over and could be starting to cross below the 20 period exponential moving average. So that's turning this more negative and prices below all three lines, even though we're right at the bottom end of this. And then we're looking vulnerable with the short-term trend. We are negative when we look at the 20 period moving averages. This is another study to look at the condition of the trend, and these lines move a lot faster than moving averages. This is a double and triple exponential moving average, really quick. And so we're below the lines and the lines are coming down. That's why this is negative. And we're below the simple and exponential moving averages here. That's why the short term is negative currently. And we're below 50 and declining with those stocks in the S&P above their 20 period moving averages. And you can see we've set a series of lower highs here in the longer term. Is this setting us up? Even though the S&P was going up, we were getting lower readings on this particular indicator. Is this setting us up for more of a decline? We'll just have to watch it unfold. That's why I do videos every day. And then we're looking a little more vulnerable, but we're holding up for right now with the intermediate term trend based on 50 periods. We're below both of the lines. The red line's starting to come down. The blue line's still pretty much flat. But the longer we stay below this, the more we're possibly going to see this roll over. But it's hanging in there for right now. And we're below 50 with those stocks above their 50 period moving average. So, and again, series of lower highs here as the S&P was going up. Is that a concern? Something that we'll watch. And we're below 50 with the 100 period moving average study. Now, if you remember back over to the positive side, we're still okay with the 200 moving average study. It's the 20, 50, and 100 where we're seeing some vulnerability right now. And then we are going down now. We're below 25, which usually when we get to a low reading like this, we use it as a contrarian indicator. But last April, we camped down here for a long time below 25. The market was just afraid to get positive, and that eventually took us up out of those lows. So because we actually came down a little bit in Friday's session, I'm treating this as negative, but at the same time, it could be positive because on a shorter term basis, most of the market is extreme negative now. And we're coming down here. Now, the reason why this is still a positive reading at 3.75, but we were way above 4. Then we dropped down to about 4 a week ago. Now we're dropping down to the 3.75 range. The context is that this is looking more negative. Even though you just look at the number, it looks okay, but we are coming down now within the investors' intelligence. This is another sentiment gauge that we look at, and it's updated once a week. And here's the daily point and figure chart where we had green X's on the weekly side. Well, we're seeing red O's here on the daily side, which is more negative. And then we're still seeing more of a shift. This is an intraday chart of large cap growth to value. Longer term, we're doing okay. We're still going up and to the right, but we're seeing a little bit of vulnerability here in the shorter term with this. And we see the red line is above the blue line. In a stronger market, we want the blue line, which is growth, to be above the red line. That's just like icing on the cake. What we really pay attention to are what are the direction of these lines, and they're now currently going down. And this is the one, even in Friday's session, we bounced up a little bit here, but the intraday growth to value for the S&P, this is the one that I focus on the most. We're not looking very good here. And we were in a range going back September, October. We just couldn't really get out of that range. Then we started to break to the upside, and now you can see the context is actually more negative. Where some of the other charts were going up and to the right, this is starting to go down with a little bit more conviction. We need to see this improve to turn back and look more positive. And then we were looking really good with our small cap growth to value. This is an end of day chart, so it's closing prices. And we were really busting to the upside with the ratio, but the index didn't do anything. Now it's starting to come back down, so I'm treating that as more negative. And we were doing good with the mid cap growth to value ratio, but the index didn't do anything. And now we broke below the 50 and the 200-day moving average with this ratio. And again, this is S&P growth to value, end of day. Right in August, we topped out here. We were looking really good with this. And then we dropped down below the 50 and we could not get above that. And now we're dropping down below the 200. When the market is really positive and getting set to really move higher, this ratio would be going up, not down. Now, this could change at any time, so we want to watch this. And I update this in every daily video. And then our growth to value ratios taking a bit of a hit here. The Q's to S&P below the moving average. Discretionary to S&P below the moving average. Large cap growth to large cap value below the moving average. So the large caps, mid caps, really seeing some weakness with the mid caps. And we were holding up with the small cap growth to value ratio, but now we're below the moving average there. And this could be seen as positive. Longer term, we're still moving up and to the right. Shorter term, yeah, we're taking a bit of a hit here. And that's why I have it on the negative side because we're coming back down into the rainbow. And I have this as negative, but really it could also be positive because even after Thursday, even after Friday, we spent time above 20, both on Thursday and Friday. but we closed right at 20 on Thursday and a little bit below 20 on Friday. But the fact is that we're going up with the VIX, and any more of a significant down move, and we're probably going to break above 20 on a closing basis, and we'll break above it with the bar chart as well. And then that's when we start to see more negative annualized returns. So we want to watch that. It's hanging in there for right now, but if it really starts to break up to the upside here, that's going to be more negative. And we had the latest survey from individual investors. They're more negative, and I'm just treating that as negative right now. When we get down below this red line and when we get down below this -30 level, that's when we start to use it as a contrarian indicator. Right now, they're just more pessimistic about things. And that includes you and me because we're individual investors. Now, the reason this is negative, longer term, we're looking good. Shorter term, we're not looking so good right now with the risk on to risk off ratio. And we're seeing a little bit of vulnerability here with the advanced decline line based on price and volume, but in the bigger picture, we're still positive. And we're coming down, we're just a little bit above zero here with the advanced decline oscillator. We haven't seen a lot of conviction here. We've been just chopping around, a little bit above, a little bit below. And so it's not really showing a lot of conviction. Plus, we're seeing a series of lower highs here with the longer term indicator. And we've been, even though the 5 day and the 10 day are going up, we're really dropping off with the new highs. We're seeing a little bit of an expansion of the new lows. If that continues, that's going to roll both of these lines over. Now, if we can pick up and see more new highs breaking out and less new lows, that will switch the internals back to looking more positive. And we're looking more negative here in the short term. Now, we're okay longer term. We're right on the moving average with accumulation distribution. But in the short term boom indicator, this is a MACD that I've readjusted. We're below the moving average. We're below the midpoint. So short term, that's negative. Another smart money indicator is that we're going down with the histogram with the Chaikin money flow. And we're going down and below the moving average with the Chaikin oscillator. The three charts, accumulation distribution, Chaikin money flow, and Chaikin oscillator, these are the three smart money indicators. And in the short term, they're negative. All right. And then the vortex switched over and went negative after Thursday. And then it's continuing to look negative after Friday. The red line is above the green line, and the red line's going up as the green line's going down. That's negative. And I have this on the negative side because the S&P is holding out just about at the moving average, but all the other indexes are below the moving average. The NYSE common stock, the mid caps, and small caps. And now, when we get to the daily side of looking at our trend, this is intermediate term. We're starting to turn up, but we haven't quite crossed above the moving average yet. That would be a strengthening trend. Now, we tried to do that earlier in November. We just about crossed the moving average with the red line above the green line. And then we had a couple of up days, which blew the ADX. It's like, I can't figure out what's going on. I'm going to decrease in value now. Well, with Thursday and Friday, that's starting to turn up a little bit, but we're not quite there yet, and we're below 20. So if we cross above the moving average, that would be a strengthening trend. And then once it goes above 20, that's a confirmed trend. And then because the red line's above the green line, that would be a negative trend. And then here's the short term where we are trending already. We're above the moving average and it's negative with the red line above the green line. And we're dropping below zero with the S&P McClellan oscillator. When that's below zero, we go down with the summation index based on price. We're also declining based on volume. Broader market, the NYSE McClellan oscillator also below zero and declining. So it's hard to see, but we're ticking over here with the summation index for the NYSE based on price and volume. And now last week, the swung trading oscillator, it just seemed to want to be happy. It was going up, it was positive. Well, now it's starting to roll over, both based on price and volume. That's negative. And our momentum oscillators are still negative, showing a little bit of vulnerability, but still above the moving average based on price, just a little bit above the moving average based on volume. Seeing a little bit of weakness here. We're dropping below 50 with the PMOs. These are all the PMOs on all stocks in the S&P. Dropping below 50 there, starting to roll over with the buy signals. But the PMOs that are above zero, that's still going up to a degree because there's other stocks in the S&P that have been out of favor that are showing a little bit of strength, but they don't have as much impact on how the index is calculated because the S&P is a combination of growth, and the growth really has the most influence, and value, where a lot of the other indexes are just growth oriented. And then here, we're negative with the parabolic SAR. The dots are on top. Now the daily chart is still, excuse me, the weekly chart is still positive. This daily chart continues to be negative. And here's our momentum oscillators. Short term, intermediate term, and long term. We're rolling over and starting to look more negative. This is another momentum oscillator, the Copic curve. It's also negative. And we're really dropping now. We're below 50 and declining with the bullish percent index. We're below the moving average. These are all the point and figure buy or sell signals inside the S&P. When we drop below 50, that means there's more sell signals being generated. And that's turning more negative after it had been improving. And we're just a little bit below 50 here with the NYC bullish percent index. And we're below 50 and declining after we were bouncing back up with the NASDAQ 100 bullish percent index. And then we're not really seeing any strength here. Discretionary to staples, still below the 50-day moving average. We were doing a lot better. We're still in a longer term uptrend, but we cannot seem to get back above the 50 period moving average with this ratio. And the momentum for the NASDAQ 100 is measured by the PPO. That's another momentum oscillator. That continues to be negative, and we're below the 50 period moving average with the S&P 600 small caps and the Russell 2000 small caps. And we're below the 50-day moving average with the S&P 400 mid caps. And now here's another one, the financial sector. Now we're still in an uptrend here, but we just have not been doing all that much going back to about last spring. And we get above the 50-day moving average and then we come back down below it. Now this is still positive when you look at it by itself. When we compare it, that's when we start to get a little bit concerned. This is the financial sector to the S&P 500 in a downtrend and continuing to decline. It's like, okay, the market's picking up something that we're not hearing about in the news yet, but it's being played out here with these charts. And it's had a long time. It's not just an anomaly. This is a trend. And we actually saw a death cross here back in August, and we continue to go down right now. So then I was getting tired of just looking at this and saying the same thing every day. In fact, I stopped showing this in the daily video. I'll start bringing it back in if something different happens, but we're just kind of seeing the same thing here. And so I brought in the ARK FinTech Innovation ETF. It's part of the ARK family. Um, we were holding out above the 50-day moving average. Not so much now. We're still in an uptrend, but we're below the 50-day moving average. We're still above the 200 though. But then we're seeing a real breakdown here with the ratio. The ARK ETF FinTech, it's dropping below its 200-day moving average with the ratio, where this had been holding up much, much better. So we're seeing a little bit of confirmation. This, which is based in finance, the financial sector and tech, that's seeing some weakness, just like with the financial sector to the S&P 500. Home construction, down below the rainbow, and really underperforming when we compare it to 3 to 7 year bonds. And we're going back up here. When the staples to tech ratio, when this is going down, that's positive. When this is going up, that's negative. Now, bigger picture, we're still in a downtrend here. It's shorter term where we're seeing a little bit more of a concern. And the same thing here with the staples to S&P ratio going down in the bigger picture, but we have been bouncing back up lately, a little more defensive. Is the market finished? Did we already test the 50-day moving averages and now we're getting ready to go back into growth mode? Or is this decline just getting ready to show more legs? All right, and we're in the bigger picture, high beta to low beta. We've been going up. That's positive. Lately, we've been dropping back. And the value to tech ratio, we've been really underperforming with value. Now it's starting to come back up into the rainbow. Again, not switching in the bigger picture, but we're seeing some more shorter term vulnerability here. And we're seeing a little rollover here. The semiconductors rolling over, home builders starting to roll over after they had been improving, just going sideways with the transports, but then dropping down a little bit. Retail has been under pressure lately. That's a huge part of the economy. And then the regional banks, they were starting to improve. Now we're seeing them begin to pull back more. And then the ratios. This is discretionary to staples, the weighted version. And the reason I say that, and the reason I have two charts here at the top is Amazon and Tesla are huge and they're in the discretionary sector. So if they go up or down, that has an impact. So what I do is I look at an equal weight version of the discretionary to staples sectors. And we're going down here, and even with the equal weight, we're starting to see some weakness. Rolling over with the tech to utilities. actually holding up okay when we compare biotech to healthcare. That's growth to value. And we had been improving with hotels to utilities. Now we're starting to see this roll over a bit. And then the semi to tech ratio, bigger picture, positive. Shorter term, not so much. And momentum stocks, we were in a range, and I was just kind of looking at this chart saying, well, it's not really telling us anything. Well, now we're starting to break down when we do a ratio between momentum stocks and the S&P. Ticked up a little bit on Friday, but we have been dropping out of this range that we've been in. And it's another one. And I usually don't give any regard to Bitcoin. I show it in the intermarket analysis video that I do. But there's another chart right after this that I want to show you. And we're starting to change here with Bitcoin. We're actually seeing a downtrend now. It's below 100,000. The blue line is starting, that's a 50 period moving average, is dropping below the 200. So now we're starting to see a longer term downtrend here. Now, I wouldn't really give this much regard in and of itself, but when you go to this next chart, this is the correlation between Bitcoin and the NASDAQ 100. And you can see down at the bottom, when we get high readings like this, that means that they're going in the same direction at the same time. It can be up or down, but they're going together. And the correlation is still here pretty high. And we've been seeing some real weakness in Bitcoin, and we've been seeing a little bit of weakness, but we're holding together with the NASDAQ 100. Is this telling us that there might be more weakness with the NASDAQ 100? That's more my concern, not Bitcoin so much. It's what's going to be happening here. Is the Bitcoin weakness, is that going to carry over into the NASDAQ 100 and cause more of a downward move? All right. And then those things that we're just watching. We want to keep an eye on volume. We were above average on Thursday, the big down day. Otherwise, we've been below average with volume there. We want to keep an eye on the 10-year yield. We were right until the Fed made their announcement, we were below 4%. And then for the most part, we've been kind of chopping our way back up now with the 10-year yield. And this is interesting. The dollar in a downtrend. You can see the purple line. That's the short-term moving average, is way far away from the 200-day moving average here. We're still below 100. So we're in a downtrend here on the daily chart. But if you look at the weekly chart, we're generating a golden cross here. These moving averages, they're not as far apart from each other. So if we see a little bit of a bounce with the weekly chart of the dollar, that could be turning this longer term positive. And that goes against logic. You would think this one would turn positive. The daily chart might turn positive before the weekly chart does. No, not with the dollar. I've seen him really disconnect with each other at times. Now I'm going to be watching the 100 level on the dollar. If that goes up, that could put some more pressure on stocks. If we see the dollar start to come back down, that could actually give some support to stocks, since stocks like a weaker dollar. And then the takeaway from this, and the next three charts, this chart and the two after it, the market's not worried about inflation. When this ratio is doing what it's doing now, they're not worried about inflation or interest rates. This is going sideways, not worried about inflation. This is going sideways to down, also not worried about inflation. And we want to keep an eye on this, the spread between risky and not as risky bonds coming down a little bit here. That means a little bit more fear is coming into the bond market, but it's not really falling off a cliff right now. This is actually an inverted version of another chart where, just to make it line up with what the S&P, and then I have an inverted version of the VIX here. When these are all going down, that's more negative. And then the distance away from the 200-day moving average with the S&P. This is a daily chart. And I was harping on this thing, something fierce. Well, I'm not now, because we dropped down below this green, excuse me, blue. I do know my colors. Down below this blue line here. So we're less than 10% above the 200-day simple moving average. And other times when we got to this point, this is a daily chart, we did see more declines that came after that. Now, we've spent a lot of time above this blue dash line, and there's nothing to say we might go back up above this again. We just want to keep an eye on this. And I'm not talking about it all the time because it's not giving us the extreme reading right now, so I'm just watching it. And then oil, we are still into the high 50s. We're in the 59 range, just a little bit below 60. Just want to keep an eye on that. That's more geopolitical for that. And then here are the pivot points for Monday's session. I include them in a newsletter that I do, and I also post them on the YouTube community tab. I can't do it on Rumble, but I can do it on the YouTube community tab there. And then we have this. This is like the really it gets the perma bears hot and bothered. This is the Hindenburg omen. And then here's the criteria. One, two, three, if you want to pause this and look at it. Well, what stockcharts.com did is they came up with their own indicator. And now the perma bears tend to be pretty liberal with this, where they're like, even if we're close to a spike here, they're like Hindenburg omen, Hindenburg omen. Well, the real rules apply that if you see a spike, that's one thing, but then you have to have another confirmation spike within 20 trading days of the first spike. So we have a number of spikes in here that were not confirmed. Now we're seeing a little bit different story here. We had the initial spike back on October 10th. That was a pretty significant down day that we had. In fact, even after Thursday, there's a 1 day lag on this. This is from Thursday's decline. We're still getting another spike here. Now we need to pay attention to this a little bit more because if you go back to the end of 2020, excuse me, beginning of 2020, we were getting a whole series of spikes here, and then we had the COVID crash. And then at the end of 2021, we were getting a series of spikes. We were setting all-time highs with the S&P. Then we went into 2022, which was not a pleasant year if you're a bull on the market. And then we had a number of spikes that were not confirmed. Now we're seeing some confirmation here. So this isn't, we don't just base everything around this, but we pay attention to it, especially when it's giving us confirmation spikes. So it might turn out to be nothing. If you just look at the single spikes, the percentage is pretty low. But the last couple of times that we had a series of spikes, that warranted us paying attention to this. So thank you. I hope you're having a wonderful weekend, and I will talk to you in the next video.